Hey, we're going to get rolling in here this week. We just have a lot of volatility going on in these markets. I mean, it seems like we're moving, 10, 20 cents every day. And when we have this kind of volatility, what we try to do is just take a step back in the markets. And what helps us the most when we take a step back is looking at the monthly charts. And after we made some sales in here last week, okay, with our text messages, whether it was wheat or corn or soybeans, I want to show you here on these monthly charts what we are thinking and why we encourage to make some sales. The first monthly chart we're going to hit up here right now is a soybean chart, and we're going back over 30 years here. And on that red line up on top is $16 beans. Last week, with the hype of the market, spec buying, we had futures push above $16. Now, when you take a look at this chart, you can look back at only two other times we had front month beans above 16 bucks, in 2008 and in 2012. Something special really needs to occur for us to accelerate much more from here. When we get towards new crop, that horizontal red line we have on there is at $14.50 a bushel. I know last week when we sent out our text message, let's sell some beans at $14.50. We just don't want to overthink it. This is what we're looking at. As you can see, this chart goes back to 2007, and very few times do we spend above $14.50 or $15 beans. Again, something special needs to occur in order for us to go much higher than here. Looking at these monthly charts helps us make some decisions. That's why we wanted to share them with you here today. As we move on to the corn market right now, we have that red horizontal line at $7.50. You can see that's where it peaked out at a year ago. We also briefly traded above $7.50 in 2008, 2011, and the drought year of 2012. Again, that stopped the market out there. That shows those recent highs. When I get towards new crop December corn, that red line we have on there is $6 a bushel, and the blue line is up at $7.50. Granted, back in 08 and 11 and 12, we did go to that $7.50 level, but this past year, we weren't able to even run by $6.50. That's why as this market neared $6, we thought we should make a sale. We might have pulled the trigger a little bit early in there at that $5.80 level, but our thinking was we didn't want to sit here and hold out for $6 and never quite hit that mark. Again, taking a step back and looking at the monthly charts helps us make some of these decisions. When we get over to the wheat market, here's monthly Chicago wheat, and we have the horizontal line at $8.50 a bushel there. You got to get back to the big rally in 2008 before we push much further than that. When we look towards new crop July Chicago wheat, I also have that line in here at $8.50. I probably should have lowered it down to $8. But again, when we near this level in here right now, historically the markets have peaked out unless you got that next major bullish story. I don't know if the Russia-Ukraine conflict is enough right now in the wheat market to be that bullish catalyst. That's why we think some sales have got to be warranted and potentially looking at some additional price protection out on new crop. When we get over to KC wheat, we have our horizontal line at $9. It looks real similar to the Chicago wheat chart. And as we look towards new crop KC wheat, we put our line down at $8.50. As you can see, going back to 2010, we spent very little time above $9 a bushel on July KC wheat. Even if we have some dry weather in the southern plains right now, we need to have extremely severe issues in here to get a sustained move much higher than what we're currently sitting at. When I get back to Minneapolis wheat, except for that big spike up in 2008, that $10.50 level stopped this market in its tracks. Again, that's about where the high was this past year as well. As we look towards September, new crop Minneapolis wheat, we put our line in there at $9.50 a bushel, similar to where the $10.50 was on the previous chart. Again, we need something special to head up higher. We don't want to sound like a broken record with this, but we are getting to price levels, whether if you want to look at the classes of wheat, beans, or corn, that are sitting at a point in here right now where something needs to happen in order for us to get that next bullish catalyst. Is it inflation? Is it war? Is it crop issues in South America? Is it crop issues up here in the Northern Hemisphere? So those are all things that could maybe move this market. On the other hand, we tend to see demand slow down, and at these price levels, production is really encouraged. Now, here are some final thoughts for us as we want to wrap up this week. And again, we just want to take a step back. That helps us a bunch, especially with all this volatility in the market. And when we look towards new crop, our bias is to target anywhere from 30 to 50% cash sold. The insurance prices for both corn and beans are going to be set in here, during the month of February. And we believe these are some pretty good opportunities to get a little bit done with. That's where we're making some gradual sales. Once we get past that 30 to 50% sold, or to that point, if you want fixed risk, we would budget dollars for put options or consider a potential fence position. Now, the downside with a fence is that we are going to have margin calls with this because of the volatility and takes cash flow to hold on to it. But looking at a fence position on new crop corn, like we mentioned in the report last night, buying a $5.50 put and selling a $7 call, that takes margin, but that might be something that might fit into your specific marketing plan. The next thing, and what we just really want to mention in here, is that there's just a lot of hype and emotions in here in these markets right now, and it seems like when the volatility increases the most, and that we trade sideways and don't go anywhere for a week or two, that can signal that a low or a high is in place. And you have to wonder if that's starting to happen a little bit here in the bean market, especially after last Thursday, where you got the big production drop from Conab. Markets traded sharply higher and then closed lower by the end of the day. We're not saying that's the exact high in the market in here, but the way we've traded in here since then gives that as kind of a high water mark. The other thing is, and everyone can have their opinion on where these markets can go to, whether it's high or low. And just like there's a race to the bottom on the South American crop, it seems like there's a race to the high in here on who can project the highest number on where prices can go to. Well, that's kind of a race. We usually don't take part in here on how big or how small the crops can be or where prices can run. But I just want to throw this number out to you for the time being in here and end it on this today. Is typically the soybean market will trade 1.5 to 2 times the price of wheat. Okay, Minneapolis wheat made an all-time high at $24.26 a bushel. In 2008, when we traded above $20 a bushel, we spent less than 1 week above $20 on Minneapolis wheat. For how much we talk about $20 Minneapolis wheat, you'd swear it was around for months, if not years, but in fact, it was less than 1 week. But if we use $24.26 as our high, and we multiply that times 1.5 times, that would project a bean trade, if something similar happened to what went on Minneapolis wheat, to a high of $36.39. If we double the price of spring wheat, and that's where beans pick up to, that'd project a high of $48.52. So, we can talk $20 beans, we can talk $25 or $30 beans on where this thing can run towards. Heck, I can come up with some math in here right now where you could look at $40 plus on soybeans, just with the volatility in this marketplace. Keep in mind, I don't believe that we're going to really go to that price level in here right now, but as people want to extend some figures farther away, I'm going to tell you right now, anything's possible. What I would encourage people to do today is take a step back, look at these monthly charts, and decide how you want to manage your risk as you move through this growing season. Again, if you have any suggestions for a weekly webinar, let us know. We're going to be back here next Tuesday, for a brief webinar, and then we got our annual meeting where we're going to broadcast that live in here next Thursday. So drop us an email with some suggestions or give us a call. We look forward to being back here next week.